Okay, so the transition is on and we're in session. So today's lecture is going to be about the double entry system related to expenses and revenues. We are talking about the general day-to-day expenses that a business entity has to incur in order to sustain its everyday operations. So we are dealing with expenses like salaries of the employees, like rent of your premises, like insurances that you pay on your assets. These expenses that we will be discussing this part. And after today's lecture, our basic double entry model is going to be completed. So before we start with the discussion, I would like to refresh your memory. This slide, this is what we discussed in chapter number 2 when we were discussing the basic debit and credit rules and the bookkeeping entries relating to your assets and equity and liabilities. So I give you 2 minutes to go through every stage of expansion of this accounting equation. And when you have gone through the screen and you understood and recalled everything, then leave a green check on the feedback window. Okay, Madiha and Mehreen. Madiha, we understand, beta? You're the only one left? Good, good, excellent. So I'm going to clear all the checks and we will move on to our class. So now we need to define, remember, every time we deal with the double entry system and we need to define the rules of debit and credit for a specific accounting item, we need to first define the intrinsic nature or inherent nature or default nature of that very item. So first we will take a look at the incomes and expenses intrinsic nature, and then we are going to define the rules of debit and credit relating to incomes and expenses based on their intrinsic or inherent or default nature. So a few points that you need to I'll show these points one by one on the screen, and we will discuss it. And then, if you have any issues, then leave a red cross on the participants window. So to understand the inherent nature of incomes and expenses, that's our first point. We need to first recall their inherent nature of profit. And from the previous slide, we know that profit carries a credit inherent nature of credit, right? Why profit carries an inherent nature of being a credit item? Answer in the chat box, everyone. Why does profit carry a credit nature by default? You can write your answer in the chat box, or you can unmute your mic and tell me right away. Why does the profit carry an inherent nature of credit? Maheen, Marceline, excellent. It is an obligation because we owe it, Alina Sayed. Excellent, right? We as the business entity owe the profit to our owner, and profit is obligatory by nature, and that is why it carries an inherent nature of being a credit balance or a credit item. Somebody got dropped. Chalo, abhi, hopefully they will join back. The second point is the explanation, as Maheen and Alina have correctly identified it, and we agree that profit by nature is a financial obligation. Madiha was dropped. Let me put her back. So profit by nature is a financial obligation of the business entity towards its owner, and that is why profit carries a credit inherent or intrinsic nature. Intrinsic or inherent means the same thing. Misha, why is it an obligation? Okay, Misha asked, why is it an obligation? Misha, remember the very first class when we discussed the business entity principle that we decided that we will always have the perspective of the business entity as a person to analyze every transaction. So if you always consider yourself as the business entity, and you always consider yourself as that conceptual or an artificial person, then you always see every accounting item from that entity's point of view. So if you are the business entity and you make any profit, you owe this profit back to your owner. Your owner has provided you capital indefinitely, and in return of that indefinite contribution, the owner expects profits to be paid back to him or her. So profit is a financial obligation for you, the business entity, to your owner, because the owner has provided you the capital, and in return, you owe every bit of profit back to your owner. Got it, Misha? Okay, Misha understood. So profit, since being an obligation, it carries an intrinsic credit nature or an inherent nature or default nature of being a credit balance. Now let's see how profit is connected with the double entry model for incomes and expenses. Now remember profit from a previous slide as well. The profit is the outcome of incomes or revenues compared with your expenses. If your incomes exceed your expenses, you will have your profit. And if your incomes are less than the expenses, that means you will have a negative profit. We call it a loss, right? So in any case, your revenues are always going to be compared with your expenses. Revenue is another name for income. So your incomes are always going to be compared with your expenses. And whatever the outcome is, that is your profit, right? So we understand up to the fourth point on the slide. Give me your feedback quickly. Fajr, okay. Amna Kashif and Amal Mariam. Amal, bete, nahi samajh aayi? Okay, good. Incomes and revenues have a positive relationship with profit. That means more incomes, more profits, less incomes, less profit. Do we understand point number 5? Since profit is the outcome of incomes minus expenses, so obviously incomes and profits, they move in the same direction. If you have more incomes or increase in incomes, your profit will be eventually higher than before. And if you have earned lesser incomes, your profits will be lower. So that means your profit and incomes, they have a positive relationship or they move in the same direction. So more profits or more incomes means more profits, less incomes means less profits. Do we understand point number 5? Give me your feedback on the participants window, please. Excellent. Misha, Maheen, Fajr. Okay, excellent. Expenses and profits, they have an inverse relationship. Inverse relationship means they will move in the opposite directions. That means if your expenses increase, your profits will decrease. More expenses, less profits, and vice versa means you have lesser expenses, you will end up getting more profits. So point number 6, any objections? Give me a green check on the feedback window or a red cross if you don't understand the 6th statement on the slide. Amal? Okay, excellent. So finally, in conclusion, we could say that incomes and profits will share the same inherent nature, since incomes and profits, they have a positive relationship. So incomes and profit will bear the same intrinsic nature, and that was credit. So incomes and अगर हम mathematically इसको explain करें, there is a conceptual explanation for that too, but that we will discuss that when we move to our discussion on accruals principle later on. But for now, you can the mathematical understanding will suffice. So your incomes and profits, since they have a positive relationship and they always move together in the same direction, so we could say that they also share the same inherent nature, which is obviously credit. and expenses and profits, since they have opposite characteristics, they move in the opposite directions. They have an inverse relationship, you could say. So expenses and profits have opposite inherent natures. So do we understand the point number 7? Your feedback on the participants window, please. Excellent. Iman Badr, Maheen, sorry, Mehreen. Mehreen, आपको समझ आ गया बेटे? ओके, गुड. सो इसका मतलब ये है सिंपली कि एक प्रॉफिट चूंकि क्रेडिट नेचर है प्रॉफिट की, तो फिर इनकम्स की भी क्रेडिट नेचर होनी चाहिए. एंड दैट इज व्हाई point number 3 and point number 5 I have highlighted in green, so that you can make it, you can always develop a connection over there. Since profit has a credit nature, incomes will also have credit nature by default, and expenses have an inverse relationship, so expenses will have a default debit nature. Since profit has a credit nature, so expense has to have the opposite nature to it. So now let's finalize the rules for double entry system related to incomes and expenses. We know profit has an intrinsic credit nature or default inherent nature of being credit. Let me clear the feedback first. Yeah. So profit has an inherent credit nature by default. So if we connect profit with incomes and expenses, we should agree that profit and incomes have the same or a positive relationship. They should have the same intrinsic nature, that is credit, and expense and profit should have opposite default natures or inherent natures. So if profit is credit, then expense must be debit, right? Just a second. So if we agree with identification of the default nature of these 3 items, then give me your feedback on the participant list. Okay, Misha, we don't understand better? Okay, we do. Understood. So now let's see what happens to expenses in the double entry system. So do you agree with this, that expenses, if increase, they should be further debited? Since their default nature is debit, then increase in the expense will mean they should be further debited, right? And if the expenses decrease because of some transaction, then decrease in the expenses should be credited. So give me a green check on the feedback window if we agree with these conclusions. Iman, Acha, Amal Mariam and Amna, Kashif, Amal. We agree that since expenses carry an inherent nature of being debit, that means a further increase in expenses should be further debited and a decrease in the expenses should be credited. Amal still not giving me the feedback? Amal did. Okay, thank you, Amal. And now if we apply the same logic on the other side of the equation, since increase in incomes, yes, Misha, very important. Misha has raised a question over here. So I am going to, yes, Misha, I will answer this question in a bit, right? Just let me complete this slide and then I will come to answer your question. So since incomes have a credit nature by default, right? So increase in incomes are going to be further credited and decrease in incomes is going to be debited, since decrease is the opposite of the credit, so it will be debited. So I will answer Misha's question, but before that, just let me know if you understood everything on this slide. The slide is over, right? Your feedback on the participants, please. Good, good, good. We are just defining them from a purely mathematical perspective. अभी हमने इसकी conceptual understanding लेनी है और उसके लिए हमें एक बहुत we have to understand a big massive concept coming up, accounting concept called the accruals concept or principle of accruals. जैसे business entity था, just like business entity, and what was the other one? Duality principle. there is a big concept coming up which will actually change your perception about the accounting completely. So we will discuss that later on. But for now, just the mathematical explanation will do. So if you understand the rules of double entry related to your expenses and your incomes, what are visible on the screen right now. So please give me a green check. Fajr and Madiha. And good, good. Okay, now coming to this very troublesome question Misha has asked in the chat box. Misha says, sir, expenses mean we are giving away. So shouldn't they have a credit nature? Okay, Misha, debit and credit are not decided based on what is being given and what is being received. There are many levels of trying to understand what debit and credit is. Debit and credit are not as simplified as increase or decrease or plus or minus or giving or receiving. It's not as simple as that. The first level of understanding, maybe you could say that credit is when you give and debit is what you receive and so on and so forth. But this is not how it is. Let me give you an example. If I ask you that this statement, increase is good, would you agree with the statement, increase or abundance is a good thing, right? Increase or abundance of something is a good thing, right? So Misha says yes, and Maheen says no. So we have Madiha says depends. We know everything depends on the perspective in which we are analyzing something. Remember, the first thing is perspective definition. So increase is good or decrease is bad. These are not the right way of thinking. These are not the right conclusions to draw. It depends on something. For example, increase in resources or increase in wealth, increase in light, increase in welfare. These are good things. But increase in evil, increase in darkness, that's not good. So you cannot associate the term increase with something good or evil or bad. It depends on what increase is representing right now. Increase or decrease are simply the way of representing something. It's simply a way of presenting the quality of something, right? Excellent. I agree. Everyone is saying it depends. Alicia says depends on what is increasing, and Misha now agrees that it depends too. Great. Similarly, decrease cannot be associated with something bad or evil. It depends on what is decreasing. If the goodness is decreasing or if the light is decreasing, then this is something bad. But if evil is decreasing, injustice is decreasing, then it's something good. So decrease को bad या evil के साथ associate करना and associating increase with something good or something beneficial for us, that's not something good. So we cannot really have these preconceived notions to associate increase or decrease with good or bad. Same goes with the debits and credits. You cannot associate debit with an increase or credit with a decrease, or debit with what you receive and credit with what you give out, or otherwise. Debit and credits are going to carry different levels of meanings depending on what are we analyzing right now. So debit simply means increase in your assets or decrease in your obligations, right? अब हम ये चूंकि discussion शुरू कर चुके हैं. Actually, I was not planning to discuss the conceptual understanding of expenses or revenues in this chapter. But since now we have already gone past a certain stage, and I can see in the chat box your feedback is quite healthy, let's see what expenses truly mean. And I don't have that here in that slide, so let me just bring out something here. So let me just define mathematically what debit simply is. Debit simply means either increase in your assets or decrease in obligations. This is what debit is, right? You can't really say it's always good or always bad. Sometimes there is a certain asset which increases more than an acceptable stage. You do not really consider it good. I mean, this may sound strange right now that increase in asset in a specific asset beyond a certain point is not good. Assets तो एक अच्छी चीज होती है. So increase in the asset is not good. We will discuss all those things later on in interpretation stage when we do ratio analysis. We will see that inventory asset beyond a certain point is not something good for us. We will discuss that. But right now, let's not worry about the increase in the assets or decrease in the obligation as good or bad, because it all depends on the circumstances. We need to see things in a clearer perspective, and perspectives never remain the same. It keeps on changing. So the definition of debits and credits and interpretation of debits and credits will keep on evolving. Same goes with the credit. How do we identify mathematically? Mathematically, credit simply means increase in the obligations or decrease in the assets. This is what mathematical interpretation of a debit and credit. We cannot really identify these things as good or bad because it all depends on circumstances. But right now, we just have to stick to mathematical understanding. How is how is expense debit? अब expense अगर हम mathematical meaning पे जाएं, so if expense have a debit intrinsic nature, that means either assets are increasing or your obligations are decreasing. So which of the two conceptual interpretations of the inherent nature of debit makes more sense here? Increase in the assets or decrease in the obligations? What do you say in the chat box? Expenses, let me repeat the question again if it is not clear. Expenses, as we have decided from our previous set of slides, expenses have an intrinsic nature of debit. That means expense either represent an increase in the asset or a decrease in the obligations. So which of the two probably makes more sense in this case? Decrease in the obligation, Mahin says, Hadia says, decrease in the obligations, Asma says. Asma, I'm calling your name right now. Asma says, decrease in the obligation, right? Okay, and makes sense. Decrease in what obligation? Can you identify the obligation, the name of the obligation which is decreasing? Profit for once. Let me just give you an example over here. Paid rent by check. $500, let's say. So this is an example of an expense. Absolutely, Alicia. Alicia has also raised the point. Alicia says, couldn't it also be increase in the asset because you're buying something? Of course. Every non-current asset that we have seen over in the previous 2-3 chapters, every asset that we buy, it is also some sort of an expenditure, don't you think? Don't you think that buying a motor vehicle, paying by check is an expenditure as well? Just like I think Alina Vakas or Alina Sayed, somebody identified earlier on that this is also an expenditure. So the point is, whatever logic that you want to apply here, that increase in the asset or decrease in the obligation, expenses eventually boil down to have an intrinsic nature of credit, because most of the cases expenses simply means discharging some obligation of yours. Okay. Sometimes an expense means an increase in the asset. For example, purchases account, and we just finished chapter number 3. Purchases account has a debit balance always, right? Because purchases account by default, by inherent nature, is an expense, and purchases account directly contributes towards an increase in the asset called inventory. Do you understand? Sometimes expenses, they cause an increase in the assets. Sometimes, and most of the cases, in fact, most of the times, expenses, they do represent your decrease in the obligation, just like the example over here. So whichever way you choose to see expenses, the only conclusion you will arrive in the end is that the expenses have an inherent debit nature, right? Now let's see, how do we justify it here? One way of justifying the debit nature of expense, let me just put the entry first here. We will debit rent account and we will credit the bank account, right? This is how we are going to journalize this transaction, right? This transaction here is going to be journalized this way. So we are going to debit the expense account. In this case, rent is representing your expense, and we will credit the bank account, and we can justify the logic behind these debits and credits. Why are we crediting bank account? That's an obvious thing, because you are losing $500 from the bank account and you're losing $500 worth of balance from your bank. That means your bank asset is decreasing, and that's why you credit the bank account. Why are we debiting rent account? That's the problem here. Why rent account is going to be debited? Expenses accounts are going to be debited. All the expenses account, we're just taking one example right now. Why are we debiting rent account? Because rent account must be either causing an increase in your existing assets, or it is causing a decrease in your obligation. So what do you think? Rent account being debit, is it adding to an asset of yours, some asset of yours, or it is causing a decrease in your, or discharging your liability towards someone? It's always going to be decrease. You will see most of the cases, expenses will always represent, yes, Alina says decrease in obligation, Alicia Azim, decrease in obligation. Now, you can see these obligations on two different levels again. The basic level is that since you have rented out this premises from some person X, so that person X, your landlord, becomes an obligation to you, because when you use your rented premises for a month, you owe rent to your landlord. So that person becomes an obligation. And when you pay rent at the end of the month, you discharge your obligation towards that person, right? So you could see it like this, or you could see it in a more mathematical way. The other explanation could be said that since rent is an expense causes a decrease in the profit, and profit is an obligation by nature for you towards your owner. So rent increase means it has to be debited so that it will reduce your profits. So that is the mathematical way of looking at it. So whichever way you choose, mathematical or conceptual understanding, you will arrive at debiting rent account and crediting bank account. So if you understand this discussion, so your feedback on the participants list, please, quickly. Misha, right? We understand better? Misha does understand. Madiha, aapka reh gaya? Check. Madiha. Good, Madiha, right? Okay, so we can also give the same comparison here. We can always compare these two by giving an example of an income. Remember, income, there is one source of income that we have already seen in the previous chapter, sales account. Sales account is an income account by nature, right? So sales account is credited, right? So the sales account, let's say cash sales, if that is the transaction, $100. We have seen this transaction in the previous chapter. Cash sales ka matlab hai sold goods and you receive the cash immediately, right? So cash sales $100. That means your debit will be cash 100, right? And you will credit the sales account. We have seen it in the previous chapter. This is what we end up doing. We debit the cash account and we credit the sales account. There is no problem in seeing the debit to the cash account. Your cash asset is increasing. Let's justify the credit to the sales account with these two reasons. How is sales account credit justified? Because of either it is increasing your obligation or it is causing a decrease in the asset. So you have the chat box. Tell me why, how can we justify the credit to the sales account keeping these two in mind? How is sales account causing an increase in the obligation or a decrease in the asset? Okay, decrease in the asset. Which asset? Asma, Alicia? Inventory decreases, Maheen. Excellent, Maheen. Right? So if we try to justify it from this perspective, that credit means decrease in the asset. So sales account is causing your inventory to go down. So we can justify it from this perspective. How about this one? How is sales account increasing your obligation? Sales account, sales is an income. It is causing your asset to decrease, but how is it increasing your obligation? I don't get it. Remember, it's not necessary that one thing can justify both of these aspects. It only has to justify one of the two, but sales account justifies both. So can you identify? It is increasing your profits, Maheen. Again, very good, Maheen. आज माहीन ने बहुत अच्छे आंसर दिए. It can increase your profit. Alina Sayed, excellent profits. Yes, sales account being an income is increasing your profits. And your profit increases means you owe more to your owner. So again, you can see increase or decrease cannot be taken in a good sense or a bad sense. For example, increase in obligation to the third parties is probably something which is not good for the business. But increase in the obligation towards your owner doesn't harm you actually. It is actually good because your owner is not going to take the money away from you anyway. So again, all these debits and credits do not have the same meaning in every situation. Their meaning evolves, their interpretation evolves as we cover more and more parts of our syllabus and the circumstances evolve to a different level. So every time we need to interpret debits and credits, we need to see all of this into a certain perspective. But every time we need to apply these debits and credits, they have very static, fixed mathematical rules. So we understand so far? Good? Give me a green check on the feedback window. I'm going to miss this statement when our live classes, when our in-person classes start. In-person classes, I cannot ask you to leave a green check on the participants list. There won't be a participant list, right? There won't be a feedback window. Anyway. अच्छा एक और एग्जांपल मैं दे दूं. ठीक है, ये तो आपको पहले से ही पता थी, right? So let's take another example. We received rent from our tenant, some person we rent our premises to, $100 in cash, right? Or by check कर देते हैं, पिछली वाली में cash था, right? By check. So how do we generalize this transaction? The debit part is no problem because bank account is going to go up by $100, right? Bank account being an asset is increasing. So that is going to take the debit, and the credit will go to the rent income account. That is your income. So how do we justify rent income account here? The credit to the rent income account, because it is increasing your obligation called profit, and there is no decrease in assets logic applying to this. Unlike sales, sales satisfies both the conditions. All you have to do is satisfy one of the two reasons, since there is an or here, right? So if something satisfies this condition or this condition, it will be credited. So in this case, rent income is increasing in your obligations, and the name of the obligation in this case is profit. So we understand the double entry system for incomes and expenses. Okay, so give me a green check here. Yeah, good. Please go ahead. Iman Badr, Hadia Rizwan, and Amar Mariam. Okay, excellent. Now, chapter 4 is over. I want you to open your book. Go to the chapter 4. You can now read the entire text of chapter 4 and it will make sense. The text part of the chapter is very important for you to read, right? Once we have the lectures done, and basically what I describe on the screen here is your conceptual part discussed in the chapter. So after going through this, you will be easily able to understand what's written in the text part of the chapter. And now we will see the end of the chapter exercise. Please turn to page number 48. Page 48, everyone. So we are going to have some practice examples first, 4.1 and 4.2, right? I will do 4.2. We will do 4.2 together right now, and you will do 4.1 later on as your practice. So 4.2, And 4.1 identical. 4.2, complete the following table. We are given transactions as examples, and we need to learn to identify what account to debit and what to credit. So the first transaction is paid salaries in cash. That is an expense by example. So paid salaries in cash. So अपना answer आप chat box में लिखें. So what do you think? What to debit and what to credit, and then I will discuss the reasoning here. So you just write your answer: debit blah blah and credit blah blah. Right? Debit salaries, Maheen says, and credit cash. Do we agree with Maheen's answer, everyone? Debit salaries account Asma and credit what? Right? Debit salaries Alicia and credit your good. Excellent. Right? We all agree debit the salaries. Asma says credit the cash. Right? Okay. Asma एक ही sentence में दोनों parts बता दिया करो वरना फिर वो टूट जाते हैं. Fajr says debit salaries credit cash. Excellent. We have all identified it correctly. Why are we crediting cash? Because cash asset is going down. We need to have the reason in our head as well. I don't want you to accept anything in my subject or in any other subject, or for that matter, anything in your life without a reason. If you are satisfied with the reason, then accept it wholeheartedly. But if the reason is not compelling enough, that's not a good way of living your life. Anyway, so paid salaries in cash. Cash account is an asset account. It is decreasing, so we credit the cash account, and we debit the salaries account. Salaries account is an expense by nature. Expense is an asset. Expense is a debit nature account by nature. It is increasing, so we debit it. It is also representing, the debit can also be justified as discharging of your obligation towards your employees or decreasing in the profit eventually. So whichever way you choose, you will always end up debiting the salaries. And that also defeats that misconception that Misha identified earlier on. Debit does not mean receiving, or it doesn't even mean giving. It's simply, it carries different meanings in different situations. Sometimes debit means receiving, sometimes debit means giving out, right? In this case, you're giving out salaries and you're still debiting it, right? So debit and credit को इस perspective में देखना आप छोड़ दे. वो बहुत basic सा perspective था. We need to get rid of that. Debit simply means either your assets are increasing or your obligations are decreasing. That's a more universal way of looking at the debit. So we move on to the next one, received interest in cash. The second transaction is received interest in cash. इसका मतलब है you must have lent somebody a loan and that somebody is now paying you interest back. So your answer, Alicia, Alina Sayed, and Maheen, and everyone everyone agree on the fact that we will debit cash and we credit the interest account, right? Yes, we will debit cash because our cash asset is increasing, and we will credit interest income account because our incomes are increasing. Incomes inherently have credit nature, so increase in the income will be credited. The other way of looking at it, that your obligation towards your owner, called profit, is also going to increase because of this factor. So whichever way works for you, right? Excellent. So now moving on to the third one. Excellent, Maheen, Iman Badr, very good. Very good. Okay, now moving on to the next one, paid motor vehicle expenses by check. So motor vehicle expenses means fuel, uski repairs, or kuch aur cheezein ho sakti hain. So everyone, yes, bilkul sahi, debit the motor vehicle expenses account and credit the bank account. Excellent, everyone. So it's coming naturally to us now. We don't really have to think a lot to translate a transaction into a debit credit. Take care. We credit the bank account because our bank asset is decreasing. We debit the motor vehicles expenses account because our obligations are decreasing. Our obligations towards the service provider, whoever repaired our vehicle, uski taraf hamari obligation ab kam ho rahi. Received rent by check, that is our next transaction. Excellent, Iman, everyone, very good. The next transaction is we are receiving rent by check. So bank account has to be debited as correctly identified by Mehreen and Madiha and Alina. Very good. Bank account is going to be debited because bank asset is increasing, and rent income account is going to be credited. So rent income is increasing. That means your profits are increasing. So profit is an obligation. That settles the the problem. The next one is debit. Iman brother, debit check nahi bete. Check is just a representation of your bank account. So जहाँ पे check involved होता है ना transaction में, that means your bank account is going to take the debit or credit, right, Iman? Understood it? Okay, good, very good. Yeah, the next transaction, yeah, we can see the correct answer already flowing in your chat box. Insurance account is going to be debited and bank account is going to be credited. Why are we crediting the bank account? Because bank asset is decreasing. Why are we debiting insurance account? Insurance account is insurance account. आपकी obligation towards the insurance provider is decreasing. That's why you debit the insurance account. Bought stationery on credit from ABC and Company, right? So bought stationery on credit from ABC and Company. Asma, very good. Madiha, very good. Alina Sayed, very good. We will debit the stationery account and we will credit the ABC and Company account. Why are we debiting stationery account? Stationery account is an expense. It is increasing. It is also causing our stationery inventory to go up. And why are we crediting ABC Company? Because our obligation towards ABC and Company is increasing. So this is a very good transaction which defeats जो एक misconception that हर in expense के अंदर every time there is an expense involved, there will also be cash or bank involved. Like in this case, there is no cash or bank involved here, right? You're buying stationery on credit. So it's not necessary that cash or bank has to be involved in an expense or income transaction. Sometimes the income or expense transaction happen on credit. Excellent. Debit stationery account and credit ABC Limited account. Very good. So then comes then comes paid for petrol for use in business vehicles. So we are the debit the petrol account or vehicle running expenses account. You can also do that because petrol is one of the many vehicle running expenses. So we always have, not always, but firms generally have one account representing all those vehicle running expenses. उसमें fuel भी आ जाता है, उसमें vehicle की repairs and maintenance वगैरह भी आ जाती. Yeah, debit petrol or credit cash, correctly identified by Alina and Matiha and Alina Sayed. Debit. Okay. Yeah. So we debit the petrol account, but a more appropriate way of putting it is debit the vehicle running costs account and credit the cash account. Then the next one is paid. Alicia Azim says, "Sir, can't we credit bank here?" We can. Bilkul, we can. Because the transaction does not say anything about the mode of payment here. How did we pay for this petrol for the vehicle? It depends on, right? Yeah, we could, bilkul. Yeah, we could credit bank here too. You could write cash / bank. If I were you, I would do it like this. Because I would do, this is your account to be debited and account to be credited, like that, right? So I would say account to be debited is vehicle running costs. And account to be credited would be either cash or bank account. Since nothing is mentioned, so we'll have to guess one. We could have both for general description, but let's say, what is the rational assumption you're going to make over here? Should you use cash account here? If you have to choose one, which one should you choose, cash or bank? Which one makes more practical sense here? Cash, because अगर आप gas station पे खड़े हैं and you're getting yourself fuel, are you going to pay by check or by cash? Most likely you're going to pay by cash. However, there is a possibility of using your debit card or the credit card. In that case, the transaction will happen directly in your bank account. So that means both possibilities are equally applicable. But what makes more practical sense here? Cash. So we are always, when things get cloudy and things are in the gray, then you make the most practical assumption there. Understood? Okay. Great, Alicia, thank you. Good, valid point. Every question that clears out something is a good question. So anything that comes to your mind, don't think this is not a good question to ask or this is a stupid question to ask. The stupid question is the question that you held to yourself and you never asked. Okay? Okay. So the last one is received commission in cash. Received commission in cash. So what should be the answer here? Uh, Debit cash, credit commission, Alina Sayed. Very good. Cash account debit hoga, our asset is increasing. And commission account is going to be credited because our income is increasing, and increase in the income is causing your obligation of profit to increase towards your owner. So excellent, everyone. I think we are pretty comfortable with incomes and expenses journal entries. So if in 4.2 any transaction that you did not understand properly, then leave a red cross on the feedback window. Otherwise, give me a green check if you understood all the transactions with reason, not without reason, with reason. Good. Excellent. Alicia, Fajr, Mehreen. Okay. Alicia. Alicia is probably not connected right now. Acha, Alicia. Oh, okay, okay. Sorry. I've been looking at two different windows. Alicia has asked the third last transaction received. Oh, the most important of all, वो तो हम भूल ही गए. Sorry. Thank you, Alicia, for pointing out. The third last is received a refund of motor expenses in cash. So, okay, give me your answers first. Thank you, Alicia. Thank you very much for pointing it out. Okay, received a refund of motor expenses in cash. The third last transaction, we forgot. Okay, debit cash, credit motor expenses. That's what Asma and Alina and Mehreen and Misha and Iman, everyone is arriving at the same conclusion. Alicia, not expenses, credit expenses. You need to be specific. Expenses is a general description. You need to be specific which expense account. In this case, it's motor expenses account, right? Excellent. Right now, this is the only transaction where we can see expense account is being credited, right? कैश अकाउंट डेबिट होगा, उसके डेबिट को जस्टिफाई करने के लिए हमें कोई रॉकेट साइंस नहीं चाहिए. कैश अकाउंट इंक्रीज कर रहा है, आपका एसेट इंक्रीज कर रहा है. So that is why cash account is going to be debited. But motor expenses accounts are going to be credited here because you previously paid. Remember the third transaction on from top, the third transaction from top where you paid motor vehicle expenses by check. So you mistakenly overpaid the actual bill. This is what is happening. And now that person is giving you that refund जो आपने mistakenly overpay कर दिया था, right? So everyone correctly identified. We will debit the cash account because our cash asset is increasing, and we will credit the motor expenses account because this refund is causing the motor expenses to decrease, right? So when expense decreases, right? Remember, where is it? The expense when decreases, you can see it on the on the screen, your original slide where we derived the rules of debit and credit. So when your expense increases, you debit it, and when your expense decreases, you credit the expense account. The decrease in the expense credited can be justified because it is causing an increase in your profit. So expense जब कम होगा तो आपका profit automatically increase करेगा, and since profit it goes in the same direction as profit, then it has to bear the same characteristic as profit does. So received a refund of motor vehicle expenses in cash. We will debit the cash account and we credit the motor expenses account. We understood this transaction with reason. Then give me a green check on the feedback window. Quickly. Good. Amal? Amal always forgets. Right. Thank you, Amal. Now, 4.3 and 4.3 and 4 are what you're going to do yourself. I'm not going to post an assignment right now because your previous assignment is still to be graded. I will post 4.4 later on, but for now you will do 4.3. You have a similar looking set of transactions that we just dealt with that in chapter number 2 as well as chapter number 3. We are going to create the journal entries, then we are going to make the ledger accounts, and we are going to balance this account, right? All right, Mariam, I understand. Don't worry. Amal, Mariam. Yeah, it's all right. It's okay. I hope that you can hear me clearly if your Wi-Fi is not fast enough. I hope that you can see the screen and you can hear me correctly. Okay, great, excellent. So we are going to do exactly the same procedure as we have seen in chapter number 2 and 3. The only difference is that in addition to chapter number 2 and 3 transactions, there's in basic non-current assets and drawings and purchases and sales and returns inwards and returns outwards. All of these transactions are going to be there, and on top of that, now you will have some incomes and expenses both. So now now our trial balance part is complete as far as the basic double entry model is concerned. Our basic double entry model consists of 6 items, 6 accounting items. So those 6 accounting items are basically these 6 accounting items, these ones. So these basic, oops, sorry, not, where is it? Okay, done. So these are the 6 basic accounting items that we are to be familiar with. So our double entry model now is complete. In chapter number 2, we only discussed assets, capitals, and liabilities. In chapter number 3 and chapter number 4, we discussed expenses and revenues. Remember chapter number 3, that we had purchases, sales, and sales returns, and purchases returns. These were all different examples of expenses and revenues, as we have seen in the previous this slide here. Your sales is basically an income. It is causing a decrease in the asset as well as increase in the obligation. Same goes with the purchases. Purchases is causing increase in the asset, and purchases is also causing a decrease in the obligation, as in the profit obligation. The profit obligation is decreasing because purchases is going to be a part of the cost of goods sold, right? So our double entry model is complete now. So you can make yourself a trial balance which will reflect now every item in the basic double entry model. Remember, this is not complete. There are 2 further items to be added to this section, and those are very complicated items. One is what we call provisions, and the other one is what we call reserves. And I'm sure you can ask your O-level accounting friends, when these 2 items come into your accounting analysis, life will never be the same again. So assets, drawings, and expenses, capital, revenues, and liabilities, and provisions and reserves, we will leave it for a more complex part of our chapter. So today's lesson is over. If you need to do 4.3 for your practice, right? You'll have to make the trial balance. If it balances, fine. If you can't balance the trial balance, the answer is given at the back. Before you go, can you tell me July the 2nd paid monthly interest expense on a loan of $10,000 taken at 12% per annum by check? Can you tell me what to debit and what to credit and by what amount? Before we call off the class, just this last thing, because it has a little trap here. Let's see if you can detect that trap. July the 2nd, the transaction says paid monthly interest expense on loan of $10,000, which was taken at 12% per annum by check. Tell me what to debit and what to credit and what amount. Amount is more important here. Debit and credit, chalo hum pehle decide kar lete hain. Interest expense will be debited, of course, and your bank account is going to be credited because aap check se payment kar rahe hain. You're making a payment by a check. That means bank account is going down, so bank account credit. Interest expense account is going to be debit because your obligation towards your Loan provider is now decreasing. You're making a payment of interest. What will be the amount involved here? Interest expense 1200, bank 1200. Right, this is Mehreen says. Misha says interest expense debit and bank account credit. Correct, Misha, but we need to identify the amount. Madiha says 1200, Mehreen says 1200, and Maheen Marceline says 100. Very good, Maheen. The correct answer is 100. 1200 is wrong answer. You see the transaction, the trap which was set for you. Some of you fell into that trap. The trap was paid monthly interest. You are paying monthly interest, whereas the data given to you is about annual interest. It says 12% per annum, right? 12% per annum comes out to be, no doubt, there is no doubt 12% per annum is 1200, but that is for 1 year. You're not paying 1 year's interest expense. You're paying just 1 month's interest expense. See, the transaction begins paid monthly interests. So monthly interest kitna hoga agar annual interest 1200 hai, then monthly interest obviously is going to be $100. So this transaction is debit interest by 100 and credit bank by 100. Excellent, Maheen. Very good. So do we understand July the 2nd transaction? Give me your final green check on the feedback window, and then we will call it off. Madiha, Alicia? Madiha? Good, excellent. A similar trap is set on the second last transaction, July the 7th. Let's see, you could do it on your own. So I will see you tomorrow online, and we will continue our discussion further for chapter number 5. Chapter 4 is actually discussion-wise is finished, so you can do 4.3 and 4.4 for your practice. If you have any question, stay back, otherwise you can leave now.
Sir, on July 7th, what is 12,000 PA?
12,000 PA. PA is for per annum, just like the July 2nd wali transaction. PA is an acronym for per annum. So it's received monthly rent. Again, you're receiving 1 month's rent for a building which was rented out for 12,000 for 1 year, right? Per annum. P.A is per annum. So basically, in simpler words, it's $1,000. You're receiving just $1,000, not $12,000. Understood? Thank
Yes,
you,
sir.
Asma.
Thank you.
Thank you, Alina.